Good morning, traders. Let's dive into the daily market updates by BCR for 14th Feb. So today we're going to talk about uh, AUD USD, gold, and USD JPY. So let's talk about gold, what gold is doing right now. So gold prices now continue to break through the key mark of 2900 per ounce to 2930. In the Asian market on Thursday, spot gold fluctuated in a narrow range, trading around 2906 per ounce. Gold prices bottomed out and rebounded on Wednesday, falling to around 2863.99 during the session, as strong US CPI data and Fed Chairman Powell's re-emergence of the view of not cutting interest rates for the time being prompted some longs to take profits. But gold prices were quickly supported by a bargain hunting and safe haven demand, and gold prices closed above 2900 per ounce. US President Trump's new tariff policy has raised concerns about a global trade war. However, US President Donald Trump's new tariff on commodity imports and promised reciprocal tariffs as well as geopolitical risk should continue to provide support for safe haven gold prices. This is turn this in turn requires caution before confirming that gold dollar has peaked in the short term, and any meaningful pullback from the historical high of about 2942 to 2943 hit on Tuesday due to trade war concerns. From a technical perspective, the 14-day RSI, a technical indicator on the daily chart, has become a key factor in prompting some profit taking in gold prices. Nevertheless, any further declines may still be seen as buying opportunity and are limited around 2873 9-day moving average. This is followed by a support around 2855 2852, which if broken could drag the gold dollar pair further towards 2800 mark. On the other hand, bulls may now wait for gold to recross the immediate barrier of 2929, which is Thursday's high, before taking new bets. The subsequent rise could push gold prices back to 2942 area, the all-time high hit on Tuesday. Some follow-up buying will lay the foundation for continuation of the recent established uptrend over the past 2 months or so to $3,000. So now let's talk about USD JPY. USD JPY fell below 153 and the yen strengthened sharply. Investors remain vigilant as Trump reiterated his threat of reciprocal tariffs. The Federal Reserve said that a restrictive policy stance is favorable if the progress of de-inflationary trend stalls. Japan's producer price index, released on Thursday, was stronger than expected, attracting some buyers, which further confirmed the market's bets that the Bank of Japan will raise interest rates further. However, the market reaction was short lived amid concerns about the impact of US President Donald Trump's tariff on steel and aluminum imports and the upcoming reciprocal tariffs. This helped the USD-JPY pair stay above 54 mark during the Asian session and close to more than 1 week high hit the previous day. From a technical perspective, the overnight breakout above the confluence resistance of 152.75 and the subsequent breakout above the 38.2% Fibonacci retracement level of Jan-Feb decline favored bullish traders. Nonetheless, oscillators on the daily chart have not yet confirmed the positive outlook, although they have recovered from negative territory. Therefore, it would be wise to wait for follow through buying above the 154.75 154.8 area or the 50% retracement level before positioning for further gains. The USD JPY pair could then break above 155 psychological mark and head towards the next relevant resistance at the 155.45 155.5 area and around 156 or the 61.8% Fibonacci retracement level. On the other hand, the 153.5 mark followed by the 152.5 152 area now seem to protect near-term downside. Follow-through selling could drag the US-JPY pair towards 151 round number mark via the 152.75 confluence. Today's recommendation is to short US dollar before 153. Stop loss would be 153.2 and the target would be 152.1. Thank you. Let's talk about AUD USD. On Thursday, the AUD USD pair faced upward pressure again after the US dollar sell off, successfully reclaiming the key 0.63 mark and above, supported by the continued optimism of the risk complex. The Australian dollar continued to rebound against the US dollar despite an increase in Australian consumer inflation expectations to 4.6%. Previous value was 4%. The AUD-USD pair remained under pressure due to US President Donald Trump's 25% tariffs increase and Federal Reserve Chairman Jerome Powell's statement that the Fed is in no hurry to cut interest rates further. Adding to the pressure, Trump's trade advisor Peter Navarro criticized Australia on Tuesday, accusing it of destroying the aluminium market just a day after Trump signed executive order to impose import tariffs on certain metals. Australia is actively seeking an exemption from these new tariffs, and Trump previously said that he would seriously consider the request due to the trade imbalance between the two countries. On Thursday, the AUD-USD pair hovered around 0.63, remaining the above 14-day moving average on the daily chart. This indicates strong short-term price momentum. In addition, the technical indicator 14-day RSI remained above 50, reinforcing the bullish bias. The AUD-USD pair may test the 8-week high of 0.633 reached on 24 January. Then 0.6393, which was on 89-day moving average. On the other hand, the AUD-USD pair may test the main support at the 0.6259 level of the 14-day moving average, and then 0.6235, which is Wednesday's low. A decisive break below these levels could weaken short-term price momentum, potentially pushing the pair towards the psychological level of 0.62. So the recommendation here is, consider if you can consider going long AUD before 0.6305 today. Stop loss will be 0.6290 and the target would be 0.63405. Thank you.